Hey guys, thanks for joining me today. I'm Marty Pospisil, and I'm broadcasting today from beautiful Kanapali Beach in the amazing Hanuakai Resort on Maui. So, escaping a little bit of the rain in Vancouver, I thought I would share a little bit of the environment here with you as I jump into my update. And thanks again for joining me. Let me jump right into the data and share some of the latest information with you so we can bring you up to date on the Vancouver, British Columbia real estate market. Okay, I'm just going to share my screen, get started, and let's hop right into this update so we can share all of the latest data with you. Great. I hope that's coming up okay for everyone. So again, welcome to my November 2024 market update, and lots of nice data to share with you guys on our improving market here in back in Vancouver. Um, let's hop right into my table for November 2024. And as you can see, we can really see what's happening in the market. We had a bit of a slowdown over the June, July, August period. But of course, that market has stabilized in September. And you can see, as the numbers show you here, over the last month, we've had some really good improvement in the pricing starting to creep back up, getting ready for that 2025 market explosion, I'm calling it. So just jumping down here to the detached, you can see on the detached year over year sales activity, we're actually up 25.5%. So a big jump in activity from this time last year. On detached, the benchmark price year over year is almost the same, up 0.3%. And our benchmark price from last month is up a full percent. So that's significant for detached houses. We had that bit of softening over the summer, and we're seeing the prices come back over the last month for houses. On townhomes and half duplexes, we're up in activity 40.7% from this time last year. Great news for that attached higher end market. And prices are up about 0.4%, almost a half percent year over year for townhomes and half duplexes. Now, from last month, we're up almost about a percent, 0.9% in our benchmark price for townhomes and half duplexes. So again, really good improvement over October. For condos overall year over year, we're up 33.4%. So good activity year over year from this time last year. The prices are up for condos 1.6% from this time last year. Slight drop last month in the benchmark pricing of 0.6%. So you can sort of see that market starting to recover as those rates have dropped, really adding some good activity. So what's hot and what's not? As you know, the metric that I use to measure the activity of the market is the sales ratio. And the sales ratio, very simply, is the absorption rate into the market of product every month. So, for example, if at the bottom of the table, less than 11% of any given product is selling in a month, we're in a buyer's market. There's downward pressure on pricing. Prices are typically falling or softening in that buyer's market. But if between 12 and 20% of the product is being absorbed in that past month, we're in a balanced market. So it's not favoring the buyers or the sellers. But if over 21% of the product is selling in a given month, we're entering into that seller's market territory. There's upward pressure on pricing, multiple offers, etc., and that's favoring the sellers. Okay, so that's the metric we're using to measure. We look at detached houses on the west side of Vancouver. What we had over the last year, you can see quite a variety of sales ratios, ending off in September at 6%. Quite a quiet market for west side detached houses at the end of September. And this month, you can see we've creeped up to 10%. So we're still in that buyer's market territory, but just underneath the plateau, going back into balance for houses west side of Vancouver. And if we're going into condos and townhomes, for Vancouver on the west side. You can see last month we were at 12%. We hit a peak about last spring, this past spring of 24 to 26%. So we had quite an active spring, dropped down over summer. And this past month, we're at 22%. So condos, townhomes, west side of Vancouver have actually jumped into that seller's market territory. Excellent news for a lot of the people to get that market revved up again for the new year. If we look at downtown, I separate that area into its own. We ended off last month at 9% sales ratio, and you can see this month we're up at 13%. So you can see quite a jump in activity from last month, well into that balanced market territory for condos, townhomes in the downtown area. Now, over on the east side, we're looking at houses detached, Vancouver East. Last month, we ended off at 10% in that buyer's market area. You can see last year we're hovering in that balanced market territory for most of the year. And this month now we're jumping up to 13%. So we're back in a balanced market for houses on the east side. Again, not favoring the buyers or the sellers, but a good, strong, solid market at 13%. If we go into condos and townhomes, Vancouver East Side, you can see last month finished quite strong at 19%, the upper end of that balanced market territory. And this past month, we're at 26%. So very active month we just had for condos and townhomes on the east side. Again, you can see that reaction coming from the mortgage rates starting to fall, which again are triggered by that target rate, that overnight rate that's being set by the Bank of Canada, especially after that last big drop, which we'll get into. So we're definitely, for condos, townhomes, Vancouver East Side, into that seller's market territory, very active on the east side. Okay, if we look at overall Metro Vancouver, there's my map showing that whole boundary of Metro Vancouver. You can see listings are up. From the previous year, we were at just under 6,000. Now we're at 7,456. That's good news, good selection. Total sales are up from 1,058 to 1,317 sales in Metro Vancouver, and the sale price slightly down overall in Metro Vancouver by 5%. Okay, overall, the Speedo indicator, we're in a balanced market at 18% for all of Metro Vancouver. Okay, if we're looking at that sales ratio across BC, you can see that band down the middle of the graph for the balanced market. Above it, we have our seller's market. Below the buyer's market, we're smack dab in the middle of that balanced market territory for the sales to active listings ratio for all of BC. So what's happening with prices? If we look at our average price graph, I love this graph. We've got detached houses. We're hovering around that peak pricing up and down over the last several months. And same for townhomes and same for condos. We are near where that peak pricing was. We're going to hit that very quickly in the new year. And you can see overall the average prices for all three products are hovering in Greater Vancouver around that peak. We look at the 5-year trend, which I like to look at. You can see we've got townhomes at the top, houses in blue, and condos in green, and overall residential in that black graph at the bottom. If you just draw a straight line across the top, we hit that peak very recently, just as summer hit us. Prices softened a little bit over summer, and we're seeing those prices come back on that 5-year trend. So that's also good to see, very positive news. And prices on their way back already this past month as we're getting closer to 2025. So let's move on. What's happening in the burbs? Now, this is really interesting because you remember from last month, my whole suburban graph was showing mostly red, where the sales activity was down. Look at it now for detached monthly variance for detached houses in all of our suburbs is green. The entire map is green. So that shows that that sales activity is up throughout the entire Metro Vancouver area and the lower mainland, really, really good sign as we're getting into those late fall statistics, getting ready again for 2025. And if we look at the attached product, again, all green, all increased activity, except for Missions. The only place that the sales activity dropped, must be a reason for it. But again, all good news on those attached monthly variances, up across the board in the burbs. So, forecasting for spring of 2025, what are we looking at? We're looking at the market drivers in green, positive market drivers, market deterrence in red, and of course, transitioning in orange. First thing I look at is consumer confidence and buyer demand. With the rates falling and that pent up demand from the last 4 months, the buyers are getting ready to jump back into the market. Some are already there. That's showing that sales ratio go up, especially in houses and attached houses, west side, attached in the east side. That's already starting to take place. They're coming back in as those rates are getting sharper and sharper. Inflation. Now the inflation rates fell well below that 2% target rate. I'll show you a little bit later in a slide, or at 1.6%. That's awesome. So that's also a good news market driver. The cost of borrowing, I'm leaving it as orange because we are seeing the variable rate drop immediately when the overnight rate changes, but those fixed rates are going to follow, which are dependent, of course, on the bond rates as well. So it's changing for the better, and that's transitioning from red to green. And of course, inventory levels are up. They're starting to build as we get to the new year, and you're going to see an explosion of inventory and buyer demand take place probably by the second or third week of January next year. So the market drivers are mostly green. That's setting us up for that really, really active market in the beginning of 2025. So consumer confidence looking good. People have been waiting. They've been at the sidelines. They're saying, hey, things are getting better and better. The Bank of Canada is dropping the rate. Inflation's dropping. This is all good news. Let's buy next year. Many cash buyers are buying this year, taking advantage of the fact they may not need the mortgage, and the prices softened a little bit July and August. And so we've had a lot of transactions take place over the last month where people are jumping in already. So the consumer confidence is there. Unemployment rate in BC is 6%, and in Canada, 6.5%. Seeing a slight increase in that. A little bit of drop last month for the federal rate. Retail sales are, of course, up. A little bit of a sawtooth there, but they are up significantly since where we were over the COVID months. And I also look at rental rates as well. The average rents are down by about 6%, 3.25 per square foot we're seeing in Greater Vancouver. And you can, of course, see the price per square foot in all the municipalities in the bottom left of this slide. But the average rent for a furnished one bedroom is about $2,405 a month, and unfurnished about $2,370. There's not a big difference between the two anymore. So the rents are actually adjusting and stabilizing at a little bit more normal rates, and that's good for the buyer demand as well. Construction starts are way up, so we're seeing a lot of building taking place. You're seeing it, a lot of homes going up in the neighborhood, a lot of towers being built. All good news for that upcoming year next year. Inflation. So we're at 1.6%. We were at 1.95. There's Tiff Macklin. He's very happy. He has now adjusted the Canada overnight target rate to 3.75%. So that's a great, great overnight target rate. And that has an immediate impact, of course, on the variable mortgage rate holders. They're immediately paying less money per month. And the 5-year bond rates are going up slightly. Now, that has to do with the election, which, of course, is now done. Hopefully that will settle out and the results will stabilize down south of us. Also provincially, and the fixed mortgage rates will start to fall as soon as those bond rates fall. So that's where they're tied into. So that is going to happen. And borrowers are getting excited with the continued rate drop. So that's all good news from an inflation point of view. And the next rate cut will, of course, be, or the next rate announcement, let me be clear, is on December 11th. For all intents and purposes, it looks like we will get a cut. And will it be a regular cut of 25 points, or will it be what we're calling a jumbo cut at 50 points? Obviously, the more they cut, the better, but there is a bit of a dance that they've got to perform to make sure they don't do anything too dramatic that might impact other factors like our loonie. So if we look at the consumer price index, you can see where we were in that peak, up at about 8% when everyone was panicking. We are at the lowest figure since February 2021 now, and gasoline and housing, where we've seen a decrease in gas prices of about 10.7%, having a dramatic impact on the consumer price index. And we are, of course, now below what I call the Bank of Canada happiness band, which is between 2 and 3% for inflation. That's what we like to see. Inflation, we're actually at 1.6% now. So, wow, we're actually below that target rate. Could be a good thing. Also, if it keeps going down, might not be that great a thing, because inflation, when it hits zero, is that better or worse than when we're entering a deflationary phase? Number one, if we have 0% inflation, that leads to lower production, typically lower wages. I'm saying if it goes too far, it reduces demand from consumers and businesses, and it leads to still lower prices and so on. So we got to be very careful how low that drops. It can be bad because it can lead consumers to spend less now because they expect prices to continue to fall, and it can push businesses to lower wages and lay off employees and to maintain their profit levels, and that's just not good for the economy either. So we want inflation to stabilize and not drop much further, and it can make existing debt more expensive for many borrowers. And of course, the last episode of a major deflationary period was in the 1930s, where we had the Great Depression, and we certainly don't want to go there as well. So, in other words, 1.6% is great. Let's kind of stabilize here if we can. We are in sync with our neighbors. Again, we're at 1.6%, and we were at 2.5, and then down to 1.95. US inflation rate is at 2.44%, was at 2.5. So the US rate's dropping a little bit slower than the Canadian rate. So we have to be a little bit careful. The Bank of Canada, as I said, is walking or doing a little bit of a dance around the overnight target rate, because they need to continually drop the rate, but they have to be careful because we want to, as I mentioned in the previous slide, avoid inflation going to zero. We want that overnight target rate to reach its neutral range between 1 and 3% again. We're at 3.75, so we're getting very close. That's their goal in 2025, to get within that range. So it won't take many more drops to get there. And we want economic growth to go from 1.2%, where it is now, up to 2.1%. That's just better for the economy, because we don't want that economy to stall out, to prevent 0.4, to stave off that recession. We don't want a recession either. And again, if they lower the rates too quickly, the loonie will weaken against the US dollar. That's what happens if our rates aren't in sync and falling together. And of course, if the Fed doesn't sync with Canada, we could have that loonie drop. And we don't want the economic growth to stall out, because we could fall into a recession. So we have to be careful. If we lower too quickly, there's an issue. If we lower too slowly, there's an issue. So they're looking at hundreds and hundreds of factors when they make these decisions in the overnight rate. And the next one, of course, is December 11th. So cost of borrowing, they're falling at a steady pace. There are some new mortgage rules which are really interesting. I thought I'd mention to you quickly, targeted to help the younger first-time buyers. Just a clarification, when we're talking insured mortgages, when a buyer makes a down payment of less than 20%, it requires mortgage default insurance. So the price cap for insured mortgages is increased now from 1 million to 1.5 million. That's great news for Greater Vancouver and Metro Vancouver buyers who are finding it difficult, perhaps, especially families, to buy something under 1 million. So now that ceiling has been raised to 1.5. And we also have 30-year amortizations available for insured mortgages, and all buyers can get a 30-year, and investors, and it's applicable for pre-sale. So that's good news. That's taking a little bit of the pressure off some of the buyers to decrease their monthly payments by increasing the amortization to 30 years, similar to what our neighbors to the south have. And that will all take effect on December 15th. So all good news for our market with the new mortgage rules. Good to see. Now, as of October 1st, you can see the stats for the mortgage rates. You can see that variable rate continuing to fall. You can see the fixed rate might jump, might drop, depends on the bond rates, and that's really tough to predict. But overall, we are going to see those rates drop, and there's where the rates have gone over the last couple of years. And here's another graph showing where they have gone and where they are now. So that's kind of neat to see. So going past that, if we're looking at the buying power for today's cats, now there's our Pospisil Realty Group cat holding the cash in his hands. What can I buy with that cash today? Well, if we do a quick calculation at today's rates to borrow $100,000, if the 5-year rate is about 4.37%, we use a 25-year amortization, and you're paying monthly, you can borrow $100,000 for about $550 a month. So for every $100,000 you're borrowing, it's costing you $550. That's good to know. It was $565 last month. So you can see the cost to borrow money is dropping. The buying power for today's cats is getting stronger. And that's one of the catalysts, of course, for our market. So looking at inventory, Vancouver West Side houses, you can see from September to October, you can see the October inventory dropped a little bit in houses. You can see the same for condos and townhomes West Side. The inventory dropped ever so slightly from 1074 to 1054 units on the East Side houses. You can see a slight drop as well. Not many people listing in October. Many people are waiting for that New Year market to take off. And same for condos and townhomes on the East Side. We saw a drop in inventory. But overall, the inventory levels are pretty good across BC. We can see it increasing as we went through this past year. And that brings us to our forecasting. What's next for prices? Where are we going with all of this? So if we look at the analysis of what happens when the Bank of Canada eases off on its fiscal policy, i.e. lowers the rates, you can see our market go back to January 2023, when the Bank of Canada paused their rate increases, the market took off immediately. And then when they resumed again in June of 2023, the market dropped immediately. So this graph clearly shows how dependent the market is, the number of unit sales, on lending rates. We all know that, but it's quite dramatic and it's quite direct. So with the Bank of Canada continuing to drop the rates, that's certainly going to help our market. There's the forecasting across British Columbia for next year. You can see the activity is expected and forecasted to climb. I think it will be even more significant than this forecast. It might be a little bit on the conservative side. If the rates continue to fall, we're going to see that activity increase significantly. So in conclusion, we know our market is impacted by mortgage rates, inventory, and consumer demand. And inflation is falling 1.6%. That's awesome. The Bank of Canada must continue to drop the rates carefully. We want to keep in sync. We might have to wait for our neighbors a little bit. We don't want that loonie to start tumbling either, but they have to stave off that recession. So the rates will continue to drop. We just don't know, are they going to be jumbo drops or regular drops? The inventory is very good now, and the mortgage rates should continue dropping into 2025. The lower rates will lure more buyers and, of course, more sellers back into the market. That's a given. And remember, with that quieter activity we had in the end of June, July, August, and even into September, all of those people that would have bought are going to be jumping. I love the sound of the birds in the background. Hopefully, you can still hear me. I've got the noise canceling taking place, but you've got those beautiful bird songs going in the background. Love it. That pent up demand will start to pour in 2025. So that's going to be really, really impactful on our market. Those people that were waiting all of the last 3-4 months. So the buyers and sellers, I think the trigger point is going to be when the rates fall another 75 to 100 basis points. That's when you're going to see the majority of buyers jump back in. And as soon as the sellers see that activity and that demand jumping in, they're going to start listing their properties for their downsize or their upgrades, whatever they're doing. And everyone will follow each other, and that market will start to take off again. Really dependent on those rate drops. So the year-end market will continue to roll along as it does for November and December. But in the new year, 2025, we're going to see that market really take off. You watch it after the first few weeks. I predict prices to increase significantly for 2025. I think quite easily we're going to see 5%. We might even see upwards of 10%, depending, and again, how many people jump in and where those rates go next year. So that's my market update. A bunch of sellers over the last month. Again, I'm broadcasting from Kanapali Beach on Maui. You can watch this video on YouTube, Facebook, Instagram, and you can also listen on YouTube Music, Apple Podcasts, and Spotify. I'm Marty Pospisil. I wanted to thank you for joining me here at Maui on Kanapali Beach and from the beautiful Hanuakai Resort. I'll show you a picture from a drone that was taken of the resort. I'm actually right down at the back there next to the water where the other side of the pool is on that grassy area. But you can see it's a beautiful development overlooking the crystal clear oceans in Maui. Highly recommend coming here if you're looking for a break from the rain. And again, I appreciate you joining me today for my November 2024 market update. I'm Marty Pospisil, and have an absolutely fabulous November. I will see you next month.